Welcome and glad you're here this afternoon. I'm Guy LeVan with Excel Design Professional, formerly known as DPIC for those of you who have been in the business for a while. And I just want to give you a brief overview of our company and how we approach small firms. I'm a vice president in our underwriting group and responsible for our Smart Advantage program, which is designed exclusively for firms that are under $1 million in fees, which encompasses an awful lot of the small firms out there. You know, I think probably some people think it's magic how we do this, but it's really not. I want to give you a little insight into the way we look at a small firm just quickly. And, you know, it starts with the relationship between our distribution channel and an underwriter and our carrier in our company who underwrites the risks. And of course, we have specialized underwriters that are very experienced in working with designers like yourself. And it's the window into your business for us to adequately gauge the risk. You know, I think a lot of times when the bill comes due and it's time for you to look at your insurance, you're wondering what you're paying for. And I think one of the things I would stress for each of you to consider in today's presentation is to consider your PL insurance an asset and not a liability in your business. Because when you realize what you're paying for and if you've got a claims-made type of policy, you need to make sure you've got a rock-solid company behind you when it comes time to deal with a dispute that invariably happens. So we have a lot of relationships that are very, very important in this process between the agent for you and our underwriting staff. They spend a lot of time figuring out the complexities of the situation and generating the appropriate premium for the risk that's presented. But there is discretion involved in the underwriting process, takes into account claims history in the past, firm history, type of work done, et cetera, all the usual processes. You know, one of the things we have to rely on is your application. We've got to have some snapshot of what you are and what you're doing so that we can make an adequate determination of a risk and grant you terms. And so the picture of your firm that you present to us can be the following. It can be a blurry Polaroid like this, where we kind of throw darts and guess at what you're doing. I think everyone on the panel would say that's a hard situation for us, or else we can have a nice picture that's in focus that lets us see exactly what you're doing so we can adequately, once again, take all the component parts together to generate what would be an equitable premium for your insurance. But we are your partner in risk transfer, and we just want to make sure that this process is as clear as can be. The top 10 on the application, I don't want to spend a whole lot of time on this because I have a couple of bullet points listening to the group today that was much more important to me. You know, we want to know what the history of your firm is, pre-existing entity names. It's very important for us to determine how we got to where we are today at the moment you sign an application for insurance. You know, there are other issues about ownership that are important. I don't want to spend a lot of time on this. This is a little bit overkill as far as the slide goes. We want to know what your fee base is because gross receipts are the best way for us to approximate the risk exposure. How much gross receipts in place do you have? We want to know a couple of years back in your projected current year so we can understand exactly what we're looking at underwriting. And then we want to know if you have more than one location, which a lot of small firms do not, but if you have more than locations, we want to divide the fees up to get an accurate picture. Do you get certificates of insurance from your other subcontractors and people who work for you? Very, very important. We did a session yesterday with Chuck Hoyer on contract language and legal issues for small firms. Yesterday it was a neat session. And we had several people who said, you know, I'm not even sure that my subs are subs, basically. I'm not even sure they're a contractor. I'm not even sure they're actually what they say they are. You know, it's very important that we tighten up the way that we, in the contractual chain of command, that we know who we're working with and get the certificates. It makes our job a lot easier. Receipts from what kind of work are you doing? We obviously want to know your practice and qualifications. You know, your general, where you are spending your time designing. A little bit of claims experience from our viewpoint. We write an awful lot of architects. We have an awful lot of claims with architects. A lot of that is because where you sit in the contractual chain of command, but continues to be a vibrant small firm business book for us. You know, we want to know where your receipts are with regard to type of project you're doing, whether you're doing high-rise, residential, the infamous condos. We have a lot of information available to our policyholders on frequency and severity of types of projects. And then we want to know exactly, you know, how you contract for work, what documents you use, or do you use a contract? You would be surprised how much work still goes on in this country, especially by small firms without documents, contractual documents. It scares people like me. But lastly, I want to just say that we have to look at claims. We have to look what's happened to your firm with regard to the risk exposure that is out there. And right now, the disturbing economic reality of this time, those of us who have a little gray hair have been through a few of these cycles, and it's really, really scary right now, the number of small architects that are just going out of business, are going bare, and deciding to drop coverage simply because they don't have much of a choice. Fees are up, fees are down, and it's hard for them to get coverage. And there's all kind of implications with regard to your coverage and retroactive dates and protection. And it's a trend that is very, very tough right now. And I think finally, you know, organizations like the AIA and the ACEC, we like to know that you're involved professionally with your trade organizations, because we are, as you know, if you've worked with DPIC or our company, we're a huge believer in LPED and loss prevention and education to make you a better risk. As we get you as a small firm, the hope is obviously that we can train you to become a better risk with proactive LPED services. And by the way, to make your life easier, we've migrated all of that onto what's now called an LMS, or a learning management system at our firm, which is a web-based protocol, including the contract guide. If anyone's ever used the DPIC, now XLDP contract guide, it's being migrated to the web application learning management system. Easy to use, easy to change, easy to update for us. So let's see. We want to know as much about your firm on an app as we can get. Details and quality assurance and quality control methodologies. It's a risky business. We want to make sure that I don't know who built these slides, but they're really great. But any information you can give us to make that picture clear of your firm is really, really advantageous for us to assess the risk that we underwrite. And you know, you do have the ability to sometimes to speak directly to an underwriter in certain cases, and that can be very educational as well. I will turn this over to the next panelist.
Yeah, next, Dwayne Repko from CNA is going to speak about his company's perspective on this subject.